On today's episode on Money Mindset, we take a look at the concept of savings and how it affects our finances. Welcome to Gavar Ask Me Up. If you are new here, consider subscribing to this channel and don't forget to turn on your notification bell.
Savings is an integral part of finance in building a sustainable wealth. Savings is essentially mathematical, and it simply means the difference between your income and your consumption. For instance, you earn 100,000 naira a month. You spend 90,000 naira every month. You have automatically saved 10,000 naira for the next month. Where or how you owe that 10,000 naira is immaterial in terms of savings. All we know is that you have not consumed all your income. The purpose of savings is to generate investable income by reducing your consumptions. The measurable goal of savings is to increase your savings rate. Mathematically, if you have 10,000 naira with you and you want to buy a shoe, you can find the one of 3,000, 5,000 or 10,000 naira. The person who buys shoes for 3,000 naira will have a higher saving rate, not income, than the person who buys a shoe of 10,000 naira. Saving rate is not a function of income earned, but how much of that income is saved. Back to our previous illustration. An income of 100,000 naira with an expenses of 90,000 naira monthly, your saving rate is income minus spending divided by your income. Then you multiply it to make a percentage of your savings. That is 100,000 naira minus 90,000 naira divided by 10,000 naira will give you a 10% saving rate. In the context of retirement, a higher savings rate can translate to building up a pool of income, which can be saved as additional voluntary contributions, allowing you to reach retirement income goals faster. How do you then determine your financial worth? If you borrow 100,000 naira and you save 50,000 naira out of it, you have definitely not saved anything, because saving rate when you borrow is already at 0%, because the initial borrowing is already a consumption. When you borrow, you are simply spending your future income. Hence, you technically cannot borrow and then save. How do you save, and what's your savings rate? Kindly drop your response in the comment box below, and don't forget to subscribe and turn your notification bell on.